Hello, and welcome to another update video about oil. Yeah, we want to cover the WTI today. We want to cover the WTI. We see a potential breakout coming here on this chart. That's one of the reasons why I make the video today, and also because people asked me to. Obviously, over the last few days, to be honest, there was nothing to do really. I was tracking in the last video the idea of potentially a triangle here, but that broke to the upside. That was like the first warning that things could be changing. But to be fair, I still had this labeled as an ABC. So we were sort of watching for a C wave already anyway in this fourth wave with potentially one more low to come. However, I have to tell you that if we do not see a break below, or if we do not see a turnaround at $78.12, I will have to change this white wave count, or I have to get rid of it. And we have the yellow bullish alternative on the chart anyway. So let me take you through the bullish as well as bearish options. Overall, I am quite bullish on oil. The reason, or not the reason, but the question is just how high do we actually go before we get let's say, how low do we need to go before we get a reversal to the upside? I think that's how I should say it. So either the low is already in the yellow count, you know that one, that's the bullish scenario we covered. That's absolutely a viable scenario. It so far has held support down here. It didn't break any lower. So that yellow 1-2 setup that we had on the chart, still relevant, still valid, even though it came down quite deep here in December. But let's start with that scenario. In this scenario, we would talk about a target in a third wave of around, I believe I said it before. Yeah, I mean, minimally $110, possibly 130. I should scale that down a little bit. Sort of in the area between the 1.236 extension and the 1.618. That would be a target for a third wave, and that's been on the chart for a while. Expected up here, obviously, this pullback, but it just went a little bit lower than ideal, okay? So, but as I highlighted, we see a little bit of an upturn here. So I just want to highlight, this is something we need to consider, but I cannot confirm it until the $78.12 level is broken to the upside. So that's the bullish scenario. What needs to happen for that? Obviously, as I just said, we need to hold above $78.12. Very, very important. Also, what will be the resistance level above $78.12? So first of all, it also needs to form, obviously, a 5-wave pattern to the upside. Yeah. At the moment, I see if we count that third wave, we would be dealing with wave 1, not even finished, then a wave 2, 3, 4, 5. That's how the third wave would develop. And as you can see, the wave 1 only has 3 waves. So once we have 5 here in wave 1, then we can add a higher low, a support area for the wave 2. That's best I can do right now. And then in wave 1 again, this could be a wave 1, this could be a wave 2, 3, 4, 5. This is really micro counting, but my intention is to show you what really needs to happen to confirm this yellow count, so that you know what to look out for, all the parameters in case we break above $78.12, because we haven't broken yet, and I don't cover oil necessarily every day. If this here was a small wave 1, the top here that formed in December, and if this was a wave 2 to the downside, and if this is a wave 3 to the upside, it would probably have to be a diagonal that's unfolding here, to be honest. A leading diagonal in wave 1 of 3. That's not so important. What we need to understand is that a 5-wave move up needs to form. So even if we break above $78.12, that's only the first step. We could still fail after 3 waves up. And it might just be, I don't know, a wave 2 or a B wave rally then. So ultimately, we need a break above resistance in 5 waves as shown here. And my goal is to show you a possible target for waves 3, 4, and 5, so that you know what to look out for if we break above $78.12. So what I would like to see is minimally $79.86. So it's typically for this wave 3, what we'd like to see is the area between 79.86 and 83.46, then a wave 4 down and a wave 5 to the upside, possibly then to 83.46 or 87.24. So this is sort of what I've got here as a potential target range if we break higher. And I will leave that on the chart. This is one way of measuring it. Oops, I shouldn't have hidden the 200% extension. Yeah, so that's one way of measuring it. To keep it a bit clean on the chart, in terms of resistance, I only leave the 50% fib level on the chart. That's the relevant one. There's another way of measuring a target for wave 1 of 3. And that's to take the length of the larger degree wave 1. We go to the low of the larger degree wave 2, assuming it bottomed already. And then we're looking for the area between the 38.2 extension and the 61.8 extension. So it's in that area where the wave 1 should finish. It's quite funny because that's between 79 and 86.80. Very, very good overlap with the levels I already mentioned to you, okay? So obviously, as we see, there is no chance to fill in 5 waves to $79. So it's going to be possibly, yeah, up there, 86.80. Good confluence, $86. Okay, so that's what we need. We need 5 waves to round about $87. That would be a good confirmation that indeed a low has formed and that we can target that $100 plus range. So that means even if we break above resistance and it only forms 3 waves and it doesn't hold a wave 4 support, it breaks down. Okay, so that's sort of what I'm watching for a WTI. Okay, if we make another low, either from here, it could be a wave 5. Obviously, it would need to be reinterpreted if it rallies higher than the $78.12 level, but still breaks down. That would be a much more bearish option because then I would be looking at probably something like wave 1 down in a diagonal, in an ABC pattern, wave 1 of wave C, but we're not there yet, okay? But then it would be 1 down, 2 up, 3 down, 4 up, 5 down. It would take much longer to complete this. So that's WTI. Maybe let's also take a look at Brent Crude for all the Brent Crude traders and investors. Yeah, and here we see that it's already at the cusp of breaking above resistance. So what I want to do here as well, give you the relevant parameters that really need to be respected for that 5-wave move up. 1, 2, 3, 4, 5. It's going to be similar to WTI. What would be here? Target for the larger degree 3rd wave. We are dealing with... Yep. No. No. I need to start down here. So measuring the wave 1, go to the low of the wave 2. Just want to give you first of all... Oh no, what did I do? Come on, wrong tool. Sorry about that. No, we want to talk about targets for that main 3rd wave there. Okay, so a little too high. So here we talk about $104.22 to $116.76 as target for the 3rd wave. Possibly rather on the higher end, you know, if we see this, because also here we need 5 waves to form a wave 1, 2, 3, 4, 5. I'm just putting the labels there for as placeholders. The main purpose here is to define the parameters for wave 1 of 3. And here we do it the same way. Measure the length of that wave 1. That was a bit more aggressive than on WTI, than the wave 2 low. And here the 3rd should reach the minimally 86.70, maybe even all the way up to $90.75, then a wave 4 and a 5, which could stretch to 95 potentially. Okay, so that is a little bit more aggressive than on WTI. And we can leave that on the chart again. And then also what I'd like to do, I take the length of that larger degree wave 1 again, go to the low of the wave 2, and I'm looking for the 38.2 to the 61.8 extensions. And here the 61.8 is here at 86.79. That's the lower end. So I believe here we probably need to look at a little higher. 91.21. So that's a key marker. So here, I mean, the purpose of doing this is to find some confluence. So there should be either way some resistance around $86 as well, but good confluence as well around $91. So I just want to give you the areas to watch, the areas of interest. And yeah, 5 waves up need to form also here. If not, then obviously it could still break down. Yeah. It's just breaking above micro resistance. So here I assume it's going to give it a try to fill in all the 5 waves. So you've got all the parameters now. Pay attention to these. Note it can always fail after 3 waves. So therefore it's important to always watch support. But we haven't even reached the minimum target for what the 3rd wave should do here. Once that's the case, you can measure the length of the 3rd wave, and the break of the 50% Fibonacci level will be a first indication that it's breaking. But chances are if this develops a little higher that I will do an update because it's quite interesting right now. Okay, that's my update about oil. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.